Now, I know you may be anxious and eagerly waiting to get your tax returns filed for this upcoming year, but before you do that, I want to go over some common mistakes that you need to avoid before you hit that send button. So if you're ready, let's go.
The Debt Demolisher TV with Sophia Melody.
Hi everyone, it's Sophia Melanie, the Debt Demolisher, here to bring you the tools, tips, and tricks to help you manage your financial baggage the right way. In today's episode, we're going to be talking about the most common mistakes that you need to avoid when it comes to tax filing. I know in the last episode I talked to you guys about what are some things that you can do in terms of preparation, and some of you may feel like I have everything that I need and I am ready to go. But before you jump in and feel like you're ready to go, I want you to take a listen to these common mistakes that you want to make sure that you avoid to make sure that you've checked off this box prior to you getting ready to file your returns. The very most important common mistake that you want to avoid is filing too early. I've set this precedent and I've made this statement very clear to make sure that you have all of your documentation and that you've received everything that you need before you file. One of the biggest risks that a taxpayer can make is to file their taxes prematurely. And this is a huge risk because the IRS will eventually get caught up and recognize that you did not account for some income that you received when you filed your tax return. And what that ultimately turns into is a subsequent adjustment to your tax returns, which will then result into a tax deficiency that you now have to pay, plus penalty and the interest. And one thing that we do not want to do is pay any unnecessary interest or penalty. So save yourself the headache to ensure that you have everything that you need before you file, because premature filing of your tax returns will ultimately and can ultimately lead to a hefty tax bill that you do not want a year or two later. And another important piece to add to that is it could also create delays in the processing of your returns if you are expected a refund. There are systems and checks that are in place that are embedded within these government entity systems for them to kind of do a cross-reference check against what you reported preliminarily compared to what they have record of. So if there's something that is missing prematurely, they will most definitely hold your return so that it can be reviewed for manual review, and then the adjustments will take place after the fact. Have you all ever wondered why sometimes it takes so long for your refunds to get processed? Why it may take so long for your tax return to process? It's because more than likely there was some bump or some comparison that was done behind the scenes, and they recognized that either something was not fully accounted for or there was some type of miscalculation or error that they now have to have a physical person go in and adjust to give you the right amount in terms of refund or what your true tax liability is. And that leads to the second mistake that you want to make sure that you avoid, and that is making sure that the information that you reference inside of your tax returns are accurate and valid. I can't tell you how many times there are instances where people have misreported their social security numbers or other important information where it causes a disconnect between the systems where they're trying to do verifications on the back end. So the second mistake that you want to avoid is missing or inaccurate social security numbers, whether it be for yourself, whether it be for any dependents that you claim, or whether it be for your spouse, even if you are married filing jointly or married filing separately. So to minimize any processing delays or to minimize any flags that may be held against your tax return that you may not necessarily know about, it's important to make sure that each taxpayer's social security number or that each dependent's social security number that's referenced inside of your tax returns or each spouse's social security number that's referenced inside of the tax returns are accurate and valid and reflected just as it is on those physical social security cards that you have. And speaking of Social Security cards, that leads me to common mistake number 3, which is there are misspellings in the taxpayer name. So not only do you want to make sure that the Social Security numbers are reflected as they are on your physical Social Security cards, you also want to make sure that the name, the legal name, also agrees to your Social Security card. Now, I know that there are some instances where people may get married, they may change their name, they may have legal name changes and so forth. But whatever your legitimate name is, where you typically do your tax filings under, is what you want to make sure that you include inside of your tax returns, and make sure that there are not any misspellings. Make sure that there aren't any inaccuracies in your middle initial. Make sure that from your first name to your last name is spelled correctly and that it matches legal documentation. Because again, this is one of the checks that they do where they bounce not only against your Social Security number, but they also bounce up against your name to make sure that there are no discrepancies. So to minimize delays in processing your returns, make sure that your name is inputted correctly. And I know you may be saying, well, I know how to type my name. I know my Social Security number. You'll be surprised at how often there could be a very small typo with either the name being typed in, whether it be by you or someone who you have to do your tax preparation, or if you're just going through the space of speed and you may do something and you may transpose a number. Me being in the accounting field, that's one of the things that we see a lot. We see a lot of transpositions between numbers where there may be a number that may be recorded backwards or recorded in the inverse. It's a common mistake that happens, and you will be surprised at how oftentimes people may put in their information incorrectly just by the click of a mistype and not going back and proofreading to make sure that that is accurate. So sometimes through the essence of speed, you might not catch these things, or you might not realize that you've done a typo. So make sure that you do your double checking and you cross-reference to make sure that you did not inadvertently transpose a number, transpose a letter in your data entry process, and whether or not be you, the person who's preparing your tax returns as well, making sure that they didn't do that. So now that we've covered the most important pieces around the common mistakes that you want to avoid, which comes to your name, your Social Security number, and so forth, now we want to focus on the verification of the actual data, the numbers, the tax reported numbers that you now have to include inside of your returns. So the next common mistake, which is the fourth common mistake that you want to avoid, is having inaccurate information included in reference inside of your tax returns. Now, how can that be done from a financial reporting kind of data for tax purposes? This comes down to your wages. This comes down to the interest that you earn. This comes down to the deductions that you will be able to take. This comes down to anything that comes to you in a tax form, whether it be in the mail or that you have electronic access to download to be able to receive, that you now have to use to input inside of your tax returns. In this day and age, most of us use electronic softwares to file our taxes, or we have someone else to do our taxes on our regard, in which they should be using, or more than likely will use, tax software to prepare your taxes for you. But we do have some folks that prefer to go the manual route, and they want to file paper returns. If you are someone who wants to file paper returns, you have to be extremely careful with the information that you're putting inside of your returns. You want to make sure that you're accounting for all of your wages correctly. You want to make sure that you're accounting for all of the taxes that have been withheld accurately, not only for federal purposes, but also state purposes. You want to make sure that you have all of the information correct in terms of your reportable wages in box 1, pre-tax wages, all of these different buckets of information that show up inside of your W-2s, all of the different information that shows up inside of your 1099s, whether it be for 1099-R for retirement distributions, 1099 INT for interest earnings, whether it be 1099Ks, 1099Cs, 1099 divs. There are so many different forms that come to you. And if you are someone who is doing a manual return, not only do you have to make sure that you're calculating all of these things correctly, you also have to make sure that you're referencing everything correctly when you're doing your computations inside of your returns. So the safest way and the safest route to go if you want to do self-prepared is to leverage tax softwares that are available for free. One of the things that I mentioned is that IRS Free File has essentially opened up. And so now you have the opportunity to get guided tax preparation at no cost to you as long as you meet the criteria by leveraging one of the sources that the IRS has available on their Free File site. So given the age that we are in and the stage that we are in, especially in this times of technology, it's time for us to make sure that we are advancing with technology in that same regard and not be afraid to use these systems that will make things so much easier for us. The IRS is not going to vouch or not going to put information out there for taxpayer to use that they don't believe is going to meet their requirements and meet their standards for filing purposes. You may not know this, but there are some modernization efforts. There are some modernized requirements that tax software must be able to comply to in order for them to be able to transmit tax returns electronically to the IRS. So there is some safeguards in place if you feel like you're a little bit leery and you're not 100% sure about wanting to use automated systems or tax softwares to prepare your taxes. Believe you me, that there are controls in place and there are safeguards in place. And if you want to be able to get your taxes done on a more faster pace, I would suggest doing that, but I'm not going to cause you to go out of your comfort zone. I just want to encourage you to stretch yourself a little bit to say, hey, I might have been doing this thing paper for many, many years. Let me see what I can do to consider to do it more automated through tax software that will minimize the chances of me inputting inaccurate information, because you have to make sure that you're accounting for all of the income that you receive, and for your benefit and your betterment, you also want to make sure that you're accounting for all of the deductions that you will be able to legitimately receive. Now, before we jump into common mistake number 5, I need us to take a pause here because this was a lot to digest. We're going to break this conversation down into a few parts. So I want you to make sure that you like, follow, and subscribe and come back for part 2 so that way you'll be ready for the rest of the conversation of the 10 most common mistakes you need to avoid before filing your taxes. You already know what I'm going to tell you to do, and that's what? Get to work. See you back for part 2.
The Debt Demolisher TV with Sophia Meloni. The Debt Demolisher TV with Sophia Meloni. The Debt Demolisher TV with Sophia Meloni.